Good evening to everybody. It's late in the afternoon, but this is the single most important panel of the conference. Don't believe me when I say so. Let me first introduce our dear guests here, two very distinguished people and important persons. Eroğlu, the gentleman without the tie. He's joining us from IOSCO headquarters in Bodrum. Alp has over 25 years of professional experience, mostly in securities regulation, but also in the private sector. He has a law degree from Ankara University and graduate degrees from UPenn Law School and the Wharton Business School. He has joined IOSCO in the year 2010, if I'm correct, and today he's the lead responsible person for a number of work streams in IOSCO Committee number 3 and Committee number 7. They include almost everything from derivatives to market conduct, market intermediaries, financial benchmarks like LIBOR, price reporting agents, SME financing, infrastructure financing, compensation, everything. He's also the lead organizer, to the best of my knowledge, on much of international workshops and seminars on fintech and digital finance. So we have a lot to learn from him from a global perspective. And then to Taha Arvas, he was, let me start from his biological bio. He was born and raised in upstate New York, in Syracuse, New York. He has a university degree in bioengineering and finance, and then graduate degrees in MBA, financial engineering, which he has continued to teach for years, and currently as an adjunct professor he's doing in Turkey in a number of universities, and political science. He has been a consultant for many Turkish and American companies doing business abroad, and he's a columnist for a number of years in a number of different newspapers, and a commentator on economic and financial affairs, mostly on some international media. And currently, he's the vice chairman of the Capital Markets Board of Turkey for almost a year, if I am not mistaken.
About 6 months, yes.
And an adjunct professor. But both of these gentlemen are speaking on their own behalf, so they can express their own disclaimers, but neither Alp is representing IOSCO, nor Taha is representing San Marcos School of Capital Markets Board. That's the introduction. Let me just try to, in a couple of minutes, not to take much of your time, because you will be speaking out, not myself, what people talked about throughout the conference today. What happened over the last year, especially the pandemic is COVID-19 year. Fintech, TechFin, or whatever you call it, has expanded tremendously because real connection was not possible. Everything went online more or less, and that was the underlying reason for it. Social media platforms have grown tremendously, led by WhatsApp, I was told in the morning. Their number of WhatsApp users has increased by more than 50% in just 1 year. Online shopping, which we all know, has skyrocketed, and digital shopping. Digital investments, people going into regular financial securities buying and selling, like the huge demand in Borsa Istanbul. More than 1 million new investors came into Borsa Istanbul, and similar things are seen all over the world. Digital entertainment, obviously, we spend most of our time on digital entertainment, most of our spare time. In particular, the area of fintech, financial technologies, or technology applied to finance, what they now call prop tech, property tech, real estate business, both as buying and selling, and also as financing. Insurtech, insurance business, has also boomed. Last year, these are, and not surprisingly, edtech, educational tech, which is what we are living these days. Digital payments have grown. PayPal, for example, has acquired more than 50 million new customers in just 1 month of last year. That's interesting. Digital wealth management, software like Avalog and Aladdin and Barclays Plan, similar software, have attracted more and more customers. Number of appointments to reach a wealth manager has skyrocketed. Robo-advisors have become more and more popular. And maybe more importantly, the spike in borrowing, especially by SMEs, small and medium companies, by borrowings from non-bank entities, most of which are fintechs or techfins. And it presents a new challenge to banks, obviously, which has to do with pandemic, but a new trend. And both of you may be interested. RegTech, but not is technology used by regulators. It is technology developed by non-regulators, like for digital compliance platforms. So technological platforms doing your compliance work for them, so that you can report easier to regulators. Big tech like Amazon and Google cooperating with classical traditional banks. It's all grown tremendously, and cryptocurrency trading, crypto monies, has reached a volume of more than 2 trillion, they say, which is just a drop in the sea when you consider the overall financial market size, but it's growing, so we'll talk about that. And then it was very interesting, I'm just finishing up, Professor by Ufuk Akçiğit from University of Chicago. I learned from him many things about venture capital. Now the trend is that venture capital companies are not spending months on due diligence for one single startup. They are spreading their money across many startups, little bit in different startups. So the process of investing has become much shorter in time and much more effective. And venture capital, when it goes to the right startup, is basically the leading factor behind innovation. And the best example of this is the market in the USA, the other countries, in Israel and so forth. In Turkey, we are a little bit behind in that game. And he talked about Chinese venture capital under disguise, most often investing in US startups, vice versa. So this venture capital has seen the taste of big profits in supporting fintech companies, fintech startups, and that will be another push for them in the future. So a tsunami is already in the works. Not only crypto business, but fintech in general. But I think the hot topic these days is cryptocurrencies. So let me start asking questions for you. Not from only a regulator's point of view, but intellectually, your opinions will be very valuable. Now, we've seen an exponential growth in cryptocurrencies in Turkey and elsewhere, in many places. Bitcoin and other alternative coins over the last year or so, more so over the last year. What are the reasons behind that? What are the risks and benefits, if there are any risks or any benefits of cryptocurrencies? And given the trend, the ups and downs, all the magazines talk about them, and the new seizure of Bitcoins by the US FBI, US Justice Department. I mean, many funny things are going on. What kind of regulation would you envision for them, or would you recommend for them? Should we regulate cryptocurrency trading? In what capacity? Investor protection, market integrity, whatever the items you want to talk about. But let's first set the score for cryptocurrencies first. Who wants to go first? Cryptocurrencies, Bitcoin and the other guys.
How would you? Okay, let me start first.
Now, let me first explain to the audience what IOSCO stands for, because it's not a magazine name. IOSCO is International Organization of Securities Commissioners in English. There is the international standard setting body of almost all security, more than 100 countries are members of IOSCO, signatories to IOSCO contract. So in Turkey, the Capital Markets Board, CPK is a member of IOSCO for many years, from its inception. US SEC. So that's a very powerful and important organization, so that people know what IOSCO stands for.
Okay, all right. That's a very good explanation of what we are doing. As you rightly mentioned, Vedat, we are regulating basically the markets. Anything apart from the banking system and insurance is almost everything is under our jurisdiction. So I think Vedat set the stage very well, and this recent change is really mind-blowing. I mean, I'll come to that to the issue of cryptocurrencies, but everything is related to this, recent rise of the internet and the growth of the computing power. And what we see now, new incumbents are coming into the financial space, and they're challenging the traditional financial services and players. So we call this decentralized finance. I'll make the link later to cryptocurrencies, but it's basically, we define it with four letters, A, B, C, D. AI, big data, cloud, and DLT. Some people call this as shadow banking, or I think we changed that terminology, which had a negative connotation. It's basically non-bank, non-insurance financial intermediation. But the brief summary of this recent phenomenon is the use of technology. And it's really, the growth is mind-blowing. And Vedat mentioned very well now, even in the US, if you look at the trading volume of retail investors, it went up to 25% to 10%, from 10% to 25% in just only 1 year. That brings lots of new challenges. And of course, this also comes up with this amazing interest in cryptocurrencies. I think there are a couple of reasons to that. Let me explain probably one by one. First of all, I think COVID-19 has been a game changer. That's just we are doing a lot of work at IOSCO on COVID-19 and its impact on financial markets. And what we see is basically this growth of screen exposure, people spending more time at home, during the lockdowns. That was one of the reasons. And then the other point is, of course, the increased savings. And then what we have seen, again, due to COVID-19, is an increase in the money supply. Those central bank injections into the system, especially in the US. So that also created, increased this interest, especially to cryptocurrencies. And there's this interesting, there's an interesting general macro environment, which has been actually going on for some time. But in this zero interest rate environment, or in certain countries, it's even minus, I would call it that way. There is this move to riskier assets, especially among retail investors. And I think more importantly, it's also a question of trends. We are living in this social media age, and some people, especially in the younger generation, it's more like a revolutionary thing, these cryptocurrencies and investing in them. But of course, this brings lots of new challenges, especially from an investor protection perspective. I'll put market integrity and systemic risk aside for the moment, because as Vedat mentioned, it's still, I think it's almost 1.5% or 2% the share of cryptocurrencies in the global, money base, and that's still probably ignorable from a systemic risk perspective. But this comes with a lot of retail investor protection issues. I think these are the main factors in this growth. But also, of course, there are lots of, regarding your question, Vedat, about benefits and risks. Of course, it comes up with lots of benefits. Financial inclusion being the first thing. And it can help serve those populations who don't have even, for example, access to financial services or banking accounts. And it also improves the domestic payment efficiency, something which is very important. I think the other very important point is about this cross-border remittances. That's where the cryptocurrencies play a very important role. So if you look at globally today, there are around 200 million people are sending $500 billion to their families. And those people, especially in Asia, for example, they go to the Gulf region and they're working there, and they have to send money to their families. And interestingly, today the cost of money
workers' remittances. That's what you mean, right? Workers' remittances.
Exactly. And then if you look at the cost of that today, it's 7%. I mean, I think this is an embarrassing thing today. we should have solved this problem much earlier. Because I think that this amount of cost is unacceptable, and that brings the question which we can discuss later, whether we can improve the existing financial market infrastructures. But we have this problem with cross-border remittances, and I think these cryptocurrencies bring some payment efficiency in terms of the cost that these people incur. And I think more importantly, it's 24 hours, 365 days settlement and services. I think that's the other other point. But also it comes up with risks, like the main one being investor protection. With link to this, they are very volatile. If you look at Bitcoin, for example, it's 10 times more volatile than if you look at the FX, indices and FX trading. And of course, the other point is about its technical robustness and cyber security. Each one of these is a topic in itself. I'm not going to get into details, but basically, there's this amazing interest. You see, like for example, your doorman is selling his car to buy Bitcoin, and everybody's in this, and most of them unfortunately lose money when you don't know how to invest, or they panic. Again, that's the trap in every investment and for every investor. So these are basically the benefits and risks. I'll pause here, and I don't want to speak so much and leave some time to Taha as well.
Thank you. I think that was a very comprehensive answer. Professor Akgiray, should I go ahead, or do you have another question?
No, just regulation. Maybe you can touch upon what you think for the global marketplace, and if there are any developments in Turkey in terms of regulation. Are you working on it, or other institutions working on it?
Right. So
based on my knowledge, there are two pieces of regulation. The one that was published by Massak, Financial Crimes Desk in Turkey 2 years ago, and one decree published by the Central Bank of Turkey on payment systems. That's all I know about, regulation regarding these new digital technologies in finance. What would you think about this thing intellectually as an academician, and given your experience as a regulator, would you have any personal suggestions?
Right. So I did a great job of kind of laying the groundwork for how we got here. I wanted to add something specifically. I think specifically the stimulus payments in the United States by the U.S. Treasury started under President Trump and have continued under President Biden have really returned, I think, hundreds of billions of dollars to U.S. taxpayers. And this is a first for many, many citizens. The average citizen has less than $1,000 in their bank account, and suddenly a family of 5 or 4, for example, has been paid over $10,000 this year by the U.S. government. And that's on top of any unemployment that they would get if they were already employed during the pandemic. And that's a major amount of money. If you have $10,000 and you're either in lockdown or choose not to go out, and restaurants are closed or cafes are closed, you can't go to the movie theater, you find yourself with a lot of disposable income. And I think this is one of the greatest drivers behind what we see in the crypto space. Not only that, coupled with boredom, I think adds to the appetite for people to take risks. And because it's such a new sphere, we can talk about financial literacy and how important that is. I think there are papers that academic papers that describe how even sophisticated investors who have invested on average $150,000 plus in the stock market in single stocks, I think the number is something like 30% of those think the government has guaranteed their returns, the returns of their investments. So in short, financial literacy globally is non-existent. To say that even sophisticated investors, and I say that in quotes, know what they're doing, and I'm talking about the mass number of people here, it's difficult to say that more than half of investors in any stock market globally know what they're doing as far as the risks associated with that. The research doesn't show that. And so now we have this new space where it's technology driven, where the hype behind it is as great as the hype behind, we hear about all these social media traders AMC, GameStop, etc., who are really investing in stocks because they believe that they will appreciate, and obviously everyone who invests in stocks believes the same thing, but they are aware, keenly aware, that there are no fundamentals behind the price of the assets they're investing in. So this is a major pivot. This is a major intersection for regulators, because in the past we can say that rational investors have different opinions on what the value of a stock or something should be. But if even the most rational of investors acknowledges that the intrinsic value of a company or a security rather is zero, if everyone knows that the only value of a security is based on the demand for it from everyone else, then it leads to a lot of regulatory questions. So like you said in the beginning, I want to say first, I want to remind everyone that I speak not for the commission that I am the vice chairman of, or the other commissioners or the chairman for that matter, but I speak only for myself here. And I can't go into too much detail about what type of regulations are being are in the works, but regulation, as I'm sure all global securities commissions are currently working on regulation, so too is Turkey. But here's the difficulty. As you know, regulators are always lagging behind industry, but it's important not to suffocate innovation. So my personal view is, I think up until now, global regulators have allowed for innovation in the crypto sphere. They've either willingly kept silent about what's going on, or we're just slow to catch up. And that's been a boon for these markets. That's why they're, the total market cap of these cryptos it was over $1 trillion a couple weeks ago. I don't know what it is now because of volatility, obviously. But in short, it's a space that needs to be regulated because of this implicit understanding of citizens that governments are regulating all securities, not just cryptocurrencies. And it's one that, but you have to take a very a thoughtful approach to it. It has to be a hybrid approach in which you allow for innovation in new spheres, but at the same time you have to take at least the fundamental steps to ensure that if investors are putting their money to work in any asset, including cryptocurrencies, that there is at least a minimum level of regulation of these assets. Will it be difficult? It will be very, very difficult. This is unlike any other security or assets we've seen. Will it be impossible? I don't think it's going to be impossible, but it will take a long time for regulators to catch up with industry, if at all, if that's even possible. So having said that, there are obviously a lot of, as I went into detail about, despite there being risks associated with these, with regulating and being slow to regulate these industries, there are great benefits to everyone. I don't know what the net profit of Western Union is offhand, but the remittance company that or the money transfer company that comes to mind, first of all, being a traditional one. But I'm sure it's great if people are paying on average 7%. That's a digit. That's a number that's probably reduced to 1/100th of that, if not less, if you do it with crypto assets. So if it's $500 billion a year, if it's $500 billion that's being transferred a year by migrants to their home countries, that's an industry that is begging to be re-envisioned and begging for innovation that's coming. So I want to summarize. I want to finish the answer to this question by saying the benefits are so great that all governments would be hard pressed to suffocate the innovation here. So at the risk of allowing for a few regulatory failures, and I put that in quotation marks, because is it really a failure if it's not physically possible to regulate something? It might be best to allow for innovation here until we get to a certain point. And that's my answer to this question. So the benefits are so great that we have to take the risk here and allow for deregulation where possible until, with a minimum level of regulation as well, until we see that what comes of this new technology.
Since since you are both regulators, you are not free to talk as much as I am. I'm an academician, so I can't say anything. Now, my view of the way we should regulate these new technological developments is first to understand that no regulator can reverse the flow of technology.
Yeah.
First, you have to accept that. And then the first step should be not to tell the marketplace what they should do, just tell them what they should not do. And the master regulation. For example, you don't cheat your customer. You don't lie to your customer. Investor protection. As long as investors are protected in a legal and ethical sense, that's a must. On top of that, do whatever you want, as long as you go with this. That's the only way I think this, because people's behavior have changed. Like in the US, Taha, in Turkey also, many small investors borrowed money from banks to invest in Borsa Istanbul and even to buy Bitcoin, just like they were spending Trump's and Biden's money on Borsa. So people's behavior have changed, and I don't believe we can educate people. I'm one of the unfortunate persons who started the work on financial literacy in Turkey years ago, and I'm sure I ever did that. Because I don't want to be people financially literate. I mean, you don't like these things, but no matter how much you teach, professionals will know better. So we have to teach the professionals, not the average people. Let them do art, science, sports, whatever, other things.
Right. I mean, yeah, you're right. I think, it's not a specific case for Turkey. I think that we have the same problem all around the world, interestingly. And that's human nature, which is greed. I think people want to make easy money. And they follow trends, the herd behavior, which is very difficult to influence with regulation. I think investor education has a role to play. You can use different things like behavioral economics or whatever. But I agree with you that the impact is really very limited. That's what we observe also as IOSCO. And going back to the point about regulation, I think the issue here is like most of these fintech developments and crypto developments, they do not fit really neatly in the existing regulation. And as Taha rightly mentioned, these are moving much faster than the underlying regulation. The fundamental question here is probably for regulators, how to strike a balance between fostering innovation while at the same time, ensuring investor protection and avoiding systemic risk, which is also another important point. And then the other point is, of course, these technologies are very promising. We see blockchain and lots of other new technologies and cryptocurrencies as well. The problem here is if something wrong happens, say like a system-wide failure or a very big incident that may create reputational damage, then that could be like a game over. So we don't want that to happen. And then the problem for regulators here is, when you're against something so popular, it is very difficult to stand against it strongly. Even when you raise all the risks and all those kind of stuff, there is demand. Actually, when there is demand, that was the point Taha made, and they can sometimes, regulators intentionally keep silent. I think that is when it happens. But then when something goes wrong, the first question that politicians will ask, where was the central bank or where was CPK? So, I think regulators here are in a very, very difficult position, but we have to be really technology neutral here. That's, I think, what most of the regulators around the world are doing. At least I'm speaking for IOSCO. And there are different regulatory approaches when it comes to fintech and crypto. I think most of the regulators, they prefer to use the existing or apply the existing regulation on these new technologies. Whereas there are very few ones, just to give an example, like Japan, that come up with specifically dedicated regulation. And some people prefer to ban it. We have seen in China and Vietnam.
What do you think of the sandboxing method in the UK? I think I like it. What do you think about it?
Yeah, I think that's a very, and even they're trying now a global sandbox with some of the other regulators, IOSCO members. We discussed this a lot. I think there is innovation, fosters or it flourishes under a very controlled environment, which is good. And then you have the guidance from the regulators about all the regulatory compliance and all the implications. And there are lots of details about how to select which firms to put in the sandbox and then, let them flourish there. But I find it also very useful, even on a cross-border basis. This can be done. I think that's a very, very important thing. And coming back to regulation, I think that then this brings in different jurisdictions have different regulatory approaches, brings us to the problem about regulatory arbitrage, where some jurisdictions are much more fintech friendly than others.
Like Switzerland.
Exactly. You pulled from my mouth.
Estonia, places like that.
Yeah. Exactly, like the. I mean, it was Libra. Now it's DM, the Facebook's global stablecoin initiative, and those. And then some people naturally want to benefit from that. At the international level, I think that's also a challenge. And then another challenge for global standards is it always takes time for some of the concepts to mature until we come up with global standards. And fintech and technology is one of the most problematic ones in that sense, because different jurisdictions are coming with different approaches and they're coming with different pace. And it becomes very difficult in the case of IOSCO to come up with international standards. For example, how to regulate cryptocurrencies. I mean, we are not there yet. I think at some point we'll be there, but a regulation in this environment is very challenging. So we need to devise smart regulation rather than strict regulation and foster innovation, as Taha mentioned. And I think, as you said, like also investor education, financial literacy has a limited impact in most of the cases. So I see it like a three-pillar approach. First, you have to really have good regulation, which is policy making. And then you should support that with strong enforcement. I think in the case of fintech and crypto, this is extremely important. And then the third pillar is probably investor education. So we need to have this holistic approach by using three of these different regulatory tools or approaches.
Taha, we have a few minutes left. What more do you want to say to the best of your personal freedom?
I think I remember maybe 25 years ago when cell phones were coming out. There was I want to say it was the Philippines that had the quickest adoption for cell phones globally, and the reason was because there were no landlines. The landlines were very sparse. So when you have when you're in an environment where the new technology is much better, then you just leapfrog over the old technology and you go straight to it. So as a security regulator, I'm excited by the ability, the potential of not cryptocurrencies necessarily. Cryptocurrencies, to my mind, are the vast majority of cryptocurrencies are a fad in my estimation, and I think only a couple or two or three will survive, will be around in the next decade. But that's my personal belief. But as far as using the technology to trade securities is what excites me the most. If I had a stock, if I had securities that I could encrypt through this technology, some that I could allow to be sold short, for example, some that had lockout periods. Now, if I give during an IPO, some investors aren't allowed to sell, obviously, for some period of time. These are all things that I have to regulate specifically, or that I have to spend manpower on regulating. But if it's possible to program these securities, then it's a whole different ballgame. If we think of crypto, if we think of digital money, which I'm very much also excited by, it's really a security. Money is just a zero coupon bond with no maturity. So that's the same thing as a security. So we've heard of these corporate bonds coming out, or government bonds that have been done using blockchain technology. So it's the technology that excites me, really. I think the hype around cryptocurrencies will be gone in 5 years, but the hype around the technology they're based on will be with us probably for the rest of our lives. So that's what I'm very much excited about, and I look forward to industry leading the way and regulators making sure that those who don't necessarily have the financial literacy that we're talking about, and let me to be clear here, I'm talking about everyone. I can't say with certainty that my knowledge of blockchain technology or cryptocurrencies is at a place that it should be to regulate it, to regulate these securities without any questions being left on the table. That's why when we're doing these things, we have a vast network of individuals, of industry leaders, other regulators, legal experts that come together, because this is really a different ballgame altogether. And so, like I said, yeah, go ahead, Professor.
To make a point about whether something is fair or not, let me just give you from my own life. I'm one of the first 1,000 Amazon customers. I'm one of the first 3,000 cell phone buyers in Turkey. And I'm the first internet subscriber on the Anatolian side of Istanbul through telecom. So I always thought that I was in line with technology. But in the year 2013 or 14, when I came back to the university, a couple of my students asked me about Bitcoin. And they asked me to teach them about Bitcoin. And I had no idea what it was. I said, forget those funny things. We'll do serious things, it's common stocks, options, bonds, things like that. And at the time, one Bitcoin was around $2. And each of them bought a couple of thousand Bitcoins. I missed that. I was the first internet subscriber, but I missed buying the Bitcoin. I don't do financial things in my life, but anyway. But things are moving so far. I missed it because I would have done it at least on an experimental basis. I mean, to learn about how to buy, how to sell. I didn't even do that. It means that I don't know what the hell it actually means, cryptocurrency. That's the thing.
Just one very interesting story. I'll keep it short for the sake of time, but we were in Hong Kong discussing these issues. What shall we do with Libra and cryptocurrencies? And discussing at this, high skyscraper looking to the Hong Kong Bay with the best experts in Asia. And then one of my friends, when we gave a lunch break, she told me that I didn't tell you I have Bitcoins. She said, "Oh, really?" I said, yeah, it was in 2000, I think 9 or 10, when I was living in the States. My cousin gave me as a birthday gift, and I was very angry. She said, I told him, you are very cheap. And the guy was making a PhD at MIT at the time. And then the guy says, don't lose this, just keep it, put it in a bank account or wherever you want. And I said, how many Bitcoins did he give you? And she told me 300. And wow. This was December 2017, exactly $6 million at the 2017 peak. Yes. So how much would you pay basically for your cousin's birthday gift? I mean, if it's a close cousin, maybe $100, not more than that. But again, this is really amazing. Like how
at MIT in the blockchain lab, I think some years ago, in those years they gave Bitcoin free of charge to many students, so they could learn about it. Most of them didn't understand what it was. We have 3 more minutes to go because I have to catch a plane, or pardon, Taha has to catch a plane.
I will, if you don't mind, let me just quickly summarize in 30 seconds, and then I'll take my leave. Like I said, I think it's an interesting space. I think regulation is incredibly difficult right now, but I think governments and policymakers are doing their best. And I know, being from the private sector 6 months ago, I was very critical of regulators, and now I find that it's actually a very difficult role to be in. So wish us luck, and I thank you for the invitation, and I look forward to continuing the conversation in the future.
I'll ask you how you feel about regulation 10 years later also.
Okay.
Okay.
Safe flight to you.
Have a safe
Thank
one.
you. Appreciate it.
Yeah, thanks for being with us. Thank you very much. Very nice of you.
Okay. Vedat, if I may then, last maybe closing remarks. And please. I think, if there is anyone in the world who tells you that he's a fintech expert, do not believe him, because there is no such thing, okay? So no one can say what will happen after 6 months, and this is changing so rapidly and with enormous implications. And then, this discussion about who's going to be the winner or who's going to be the loser, is going to be the big techs, or is it going to be the traditional banks and all those stuff, or is it going to be central bank money, or is it going to be like global stable coin like DM or Facebook's global stable coin? So, all these discussions are I find them a little bit artificial, I think. So my point is, what will be the future of financial services, or more future of money? I think it will be a combination of everything, a little bit of and coexisting together. And in certain cases, I think the traditional ones are going to work together with the newcomers. And then if you look at, for example, this stable coin or central bank digital currencies, the main interest happened when Facebook came with this proposal. So central banks are trying to position themselves because it is something which may threaten the sovereign powers, and it may have implications on the monetary policy, right? This did not exist until 2 or 3 years ago. Right. So basically, I think so. If you ask me, like, money is probably, or the future of money is probably determined by a combination of this cryptography, let me put it that way, economics and politics.
Decentralized structure, at least partially.
Exactly, and also like we will have like probably different types of money together with different structures, as you say, centralized or decentralized. They may all coexist together. And then
we should have a full conference just to discuss what money is. Money, and what is it? I mean, that's a challenge, intellectual challenge for us. I think in the near future. And to learn something, the best way to learn something, they say, is to teach it. So to learn about the underlying conceptual framework about fintech. I'm not trying to design a new course on fintech at Boğaziçi University, just to learn for my own sake, not to teach it.
Very good, very good.
Thank you very much. It's always very nice and beneficial to have you with us. And
my pleasure.
I hope the listeners enjoyed it and benefited from that.
Hopefully so.
We are
good luck.
Okay.
Good luck
Bye-bye.
with the rest of the sessions. Bye. Thanks.